Prestige Estates posted a strong operational update for the second quarter. Pre-sales are up 66%, and collections have also jumped nearly 70% this quarter. The company is also headed for some big launches in the upcoming quarters and has guided for 12,000 crores worth of sales for the full year. Mr. Irfan Razak is CMD at Prestige Group. He's joining us right now to take some questions. Mr. Razak, it's always a pleasure. Great to have you with us here on the program. Sir, in the first half of FY23, you've done sales of 6,523 odd crores. So this is actually on track to do better than what you had guided. That is a full year number of 12,000 odd crores. As we take stock, would you want to revisit that number on the higher side? How are things looking?
Good morning, Prashant. Yes, I think we've done well. The team has really worked hard to achieve this target. Whatever we tell the outside world is always much less than what we tell our teams internally, what they have to achieve. So that's how we've done more than what we had envisaged in the first half. And I believe that this trend will continue. The only thing is that we need to get more and more inventory. We need to get more launches to achieve these numbers. And that's a function of getting approvals, function of getting all the RERA numbers on time. And I'm sure the team is working towards that. They will achieve it. And we should be, there could be one lumpy quarter, but then at the end of the day, we'll sustain this and probably will exceed more than what we've done in the first half. So that's the whole plan. The markets are good. People are committing themselves. People are buying. As you see, even the collections have shot up very nicely. So it's just not about announcing a sale and not getting the cash flow. So the cash flow is also there. And more importantly is also the production. We are pouring concrete continuously. And that is also helping us to give confidence not only to the internal teams, but also to our customers that they have to, whatever commitment they've made to us, that commitment we will keep to them.
All right. Hi, Mr. Razak. Good morning. The first half of the year, we've done 6,500 crores. Earlier, we were talking about 12,000 crores odd. Don't you want to revise that number upwards? And also, if you could tell us, what was the contribution from Mumbai, in the first half of the year, if you could give us a sense. I live close to around Pali Hill, and I think you have a new project coming out there. It's a different thing that it's not affordable for me. But what's the contribution from Mumbai?
Yeah, see, now again, very rightly you talked about the affordability. Now, this is what we've been always working towards. Mumbai, yes, Mumbai has given us about around, I think if I take the first half, around 1,100 to 1,200 crores out of the 6,500 crores that has happened. And this, I believe, at one point of time, we are looking at Mumbai becoming number one. Of course, see, we are just very just new into the Mumbai market. We are doing what we are doing. We've got some few good products. The challenge always is how to balance the overall affordability factor, how to get the numbers, because everybody can't afford a 10 crore home or a 20 crore home. So that's the problem everywhere, in every market that we are, including Bangalore or Hyderabad. And our eye is always to have a proper mix so that the volumes also keep coming. And at the same time, the bottom line is also protected.
I think it's a very millennial thing, Just when we can start to afford a 25 lakh home, the homes become 50 lakhs. When you start to afford a 50 lakh home, the homes become 1 crore, 1.5. So I guess it'll, perhaps for our generation, it may always be unaffordable. But jokes apart, tell us some numbers, sir. You've launched about 17 million square feet in the first half. How much do you plan to do in the second half? What is the, not internal, but what is the target for your investors by the end of the year?
No, see, if I don't do launches, I can't get the numbers. Honestly, today we are suffering on the other side that we have very little inventory. Now, with the little inventory that we have, we just can't achieve the numbers that we've achieved in the first half. So it's very imperative that we get in new products, new stock, new locations into the system. And if I've launched 17 million square feet in the first half, I believe that we should launch that much more in the next half to achieve the targets. And the team is, as I said, working very hard to see that the approvals come, the RERA number approval comes in so that we can do the launches. There is a lot of interest in the market. And like you rightly said, you see, we don't want it to be a moving target even for the millennials. We want everybody to have a lovely home and enjoy it with their families. So that's how we haven't taken that off from our radar. And somehow we are trying to balance it. Of course, see, the interest rates suddenly have gone up. The cost of construction has gone up. Consequent to that, even land prices. So, and the, like in a Mumbai market, the government charges are huge. So that all adds up to the overall cost of the product. And that's how I sometimes, it's always a tough ask how to balance this and how to see that everybody gets their dream home and gets it the way they want it and enjoy that space.
Obviously, that point is taken, but just want to talk a little bit about the hospitality segment as well, because it's come back in a big way. For you, what is the expectation as we move forward into the next 1 year? What kind of growth do you see in the hospitality space?
The good news is hospitality has, the demand has just kicked in very nicely. The occupancies have gone up. Across all the assets that we have, whether it's a luxury product or whether it's also a holiday resort, whatever else there is, people are spending money, people are celebrating, the revenues are up, and the best part is we are having a great ADRs and great occupancy levels. And that is also giving us the courage that whatever we have done so far and whatever we are constructing, I think we can't go wrong on it. Yes, hospitality is a long-term play. Having said that, I believe that we are on the right track, and though the investments are there, they will pay off in the long term. So also retail. Now, if you take retail has just exploded. Retail is doing well. In fact, our first mall out of the Blackstone portfolio is the Forum Mall in Kanakpura Road, that is the Forum Falcon City, is ready. And we should open the doors to public in December. We missed the Diwali target, but hopefully we should open the doors to public in December. It's fully leased out. There's a lot of interest from retailers. And I'm sure even the visitors will enjoy the space.
Right. All the best. Mr. Razak, thanks a lot, and happy Diwali to you. Greetings of the season. Thanks for being with us on CNBC.
Happy Diwali to all your listeners, and may the new year bring them better tidings and more cheer.
And may houses be affordable to all, right?
Yes, of course.
Okay.
Sonia, when you said millennials, you meant Gen Z, right?